Hello students, welcome to my channel KT's Commerce Classes. Today we should solve some problem relating to treatment of goodwill. Question has been given: A and B are partners sharing profit and losses in the ratio 3:2. On 1st January 2019, they admit C into partnership for 1/4 share in profits. C bought rupees 30,000 for his capital and 12,000 as premium for goodwill. The new profit sharing ratio of A, B and C is agreed to be 3:3:2. A and B withdraw half the amount of premium for goodwill brought in by C from business. Goodwill appear in the firm at rupees 50,000. Pass necessary journal entry. What is the first treatment we have to do? First treatment, you have existing goodwill should be written out. Now before that we have to find out what? We have to find out sacrificing ratio. Here what is given? Here old ratio of A and B is given how much? 3:2. So we will write A's old share equals to 3/5 and B's old share equals to 2/5. Again question given, new profit sharing ratio between A, B and C 3:3:2. So A's new share also given. A's new share equals to 3/8 and B's new share equals to 3/8 and C's new share equals to 2/8. Now what to find out? When old ratio and new ratio given, we have to first find out what? We have to find out sacrificing ratio. So sacrificing ratio equals to what? Equals to old ratio minus new ratio. A sacrifices. A sacrifices how much? Old ratio of A, how much given? 3/5 minus 3/8 equals to LCM will be 40. 8 5 ja 40 means 15. 5 8 ja 40 means it will be 24 minus 8 5 ja 40 means 15 equals to 9/40. B sacrifices B share, old share is 2/5 minus new share is 3/8 equals to LCM will be 40. 5 8 ja 40 means 16 minus 15 equals to 1/40. So therefore sacrificing ratio of A and B equals to 9/40 is to 1/40 equals to 9:1. Now we find out the sacrificing ratio. Now what to do? First we have to do the treatment of goodwill. The goodwill of the existing firm how much? 50,000. What is the theory of goodwill? If goodwill of the existing firm should be written off among the old partners in what ratio? Old ratio. So first goodwill should be write off 1/1/19. A's capital account debit B's capital account debit to goodwill. Goodwill how much given? 50,000. It will be 30,000. It will be 20. Journal entry will, narration will be existing goodwill written off among between A and B in old ratio 3:2. Now what journal entry we have to prepare? We have to prepare the capital introduction and premium brought by new partner. So journal entry will be bank account debit to C's capital account to premium for goodwill. For goodwill account. Narration will be being cash brought by C towards capital and premium for goodwill. Now third end. So premium for goodwill. Now next statement, premium for goodwill will be transferred to what account? Transferred to the sacrificing partner's capital account in what ratio? Sacrificing ratio. Entry will be premium for goodwill account debit to A's capital to B's capital. Narration will be being premium for goodwill credited to old partner's capital account in the sacrificing ratio nine is to 1. Now what is the value of premium for goodwill? Value of premium for goodwill is 12,000. Capital value how much given? Capital value 30,000. Total becoming 42,000. That is bank. Now again premium for goodwill how much? 12,000. It will be distributed in the ratio 9 is to 1, 10. It will be 1,200 and 10,800. Now again question telling half of the amount of premium withdrawn by the partners. For that one entry will be A's capital account debit, B's capital account debit to bank. So half means how much? 6,000 will be withdrawn. So B will be 600, A will be 5,400. Being half of their shares of premium withdrawn by A and B. A and B are partners in a firm, sharing profit and losses in the ratio 3:2. They admit C into the firm for 1/5 share in the future profits. The new profit sharing ratio will be 5:3:2. C brings in only rupees 10,000 as goodwill out of a share of rupees 24,000 and rupees 60,000 as his capital. Goodwill appear in the books of the firm 50,000. Pass journal entries assuming capital are fixed. Now before proceed with the journal entries, what to do? We have to find out sacrificing ratio. Here old ratio of A and B given 3:2 and new ratio of A, B and C given 5:3:2. So A's old share equals to 3/5 and B's old share equals to 2/5. A's new share equals to 5/10, comma B's new share equals to 3/10, C's new share equals to 2/10. Now we have to find out what? We have to find out sacrificing ratio. What is the formula of sacrificing ratio? Old ratio minus new ratio. So sacrificing ratio equals to old ratio minus new ratio. A sacrifices old ratio how much given? 3/5 minus new ratio given 5/10. So LCM will be 10. So 5 to 6 minus 5 equals to 1/10. B sacrifices old ratio of B 2/5 minus 3/10 equals to LCM will be 10. 4 minus 3 equals to 1/10. So sacrificing ratio, therefore sacrificing ratio of A and B equals to 1/10 is to 1/10, that is equals to 1:1. Now we proceed with the journal entries. Here journal entry, first we should write off the existing goodwill of the firm. Again, question telling all capital accounts are fixed. When capital accounts are fixed, we have to maintain current account. Now, first journal entry, we should write off the amount of goodwill. So, entry will be P is A's current account, debit, B's current account debit to goodwill. In what ratio we should write off the amount of goodwill? The amount of goodwill should be written off in old ratio, that is 3:2. Being the existing goodwill written off in the old ratio three is to two among between old partners. Between old partners. So existing goodwill should be written off in old ratio 3:2. Goodwill given in the question 50,000. 3:2 means A share will be 30,000, B share will be 20,000. This is my first journal entry. Second journal entry, the new partner she admitted brings 10,000 as premium money, out of his share 24,000 and 60,000 as his capital. So journal entry will be bank account debit to C's capital account to premium for goodwill. Premium for goodwill account. Now you see C bringing how much premium? 10,000. Capital brought by C 60,000. Bank 70,000. Being amount brought by C for his premium for goodwill and capital. Being the amount brought by C for his premium for goodwill and capital. C unable to pay how much? C share is 24,000, but C can able to pay 10,000. So unable to pay 24 minus 10, that is 14,000. Next journal entry, premium for goodwill account debit. C's current account debit to A's current account to B's current account. So premium for goodwill, how much she can able to pay? 10,000. See, unable to pay how much? 24 minus 10, it will be 14,000. Now, premium for goodwill, in what ratio we should distribute? In sacrificing ratio. Being the share of goodwill of C, paid and unpaid, transferred to old partners capital account. In their sacrificing ratio one is to one. So here coming 24,000. 24,000 will be distributed equally among A and B. It will be 12,000. This will be also 12,000.